good morning and thanks for logging on to ET now bright and early in the morning. This is Market Cafe with me Snehisha and with me is my co-anchor Ankita Saxena. Good morning Ankita.
Good morning to you.
Now this is a show where we'll take you through all the important global stories that you need to be tracking, how the global markets have closed yesterday, how the Asian markets have opened up today. On the latter half of the show we'll also focus on domestic sectors and tell you about all the stocks that you need to be keeping on your radar today and also what brokerages are pointing out and keeping on their notes for today's trading session. So with that, let's kickstart the show and Ankita, take us through what the global handover looked like then.
That's correct, Snehi. So the global handover, I can see, global market saw cuts because there is an important job data that came out of the US yesterday and that shows a rather tight labor market, and on the back of that, we did see cuts coming in US markets. However, Dow was bucking the trend yesterday. So US markets were a bit mixed. Fears of higher interest rates, of course, are pressuring the markets. Now those fears are back because the jobless data also, showed that the labor market is still tight. Nasdaq tumbled for the fourth consecutive day, shedding 123 points. S&P 500 was down 0.3%, and Dow was bucking the trend, was up 57 points in trade yesterday. Now, technology and semiconductor stocks were the major laggards. Apple shares dropped 2.9% on report that China is looking to broaden a ban on the use of iPhones in state-owned companies and agencies, and we'll discuss that in details going ahead. Nvidia and advanced micro devices fell 1.7% and 2.5% each. Now, the weekless jobless claims came in at 216,000 versus the Dow estimates of 230,000, which is indicating towards a strong labor market, which has been a point of concern for the Fed going forward. Also, it indicates towards a greater there could be more rate hikes going forward, and so the pressure is back. In the second quarter, labor costs also rose more than it was anticipated, so again an added pressure on the US markets. Now, European markets closed also lower for the seventh consecutive straight session. Stock 600 and DAX fell 0.1%. Mining stocks led the decline, down 2.2%. Utility stocks, however, climbed 1.4%. The Eurozone data were also released yesterday, and the final figures indicated that the economy grew by 0.1% in the second quarter versus the prior period, lower than the 0.3% growth estimated in the preliminary readings, and that shows a slightly weaker economy, and so we did see declines in the European markets as well. So I would say, Snehi, it is a negative handover coming in because the data is not very encouraging that's come out of the US or the Eurozone data that has come out.
Alright Ankita, so with that, that's what the global handover looked like in terms of equities, but let's also take a look at commodities, and particularly today let's talk about oil, because WTI and Brent crude oil futures fell on Thursday by $1 a barrel on a stronger dollar and expectations of weaker international demand. Now remember, this fall came after 9 straight sessions of gains in the US crude futures and 7 straight session of gains for the Brent. Now Brent crude futures fell $1 or 1.1% to that $86.6 per barrel mark, while the WTI futures were also down $1, that's around 1% a cut over there as well, at that $86.5 per barrel mark. Now crude futures are feeling some corrective pressure from a new high in the US dollar index, as well as more weakening economic numbers from the Eurozone, where economic activity grew by 0.1% versus the 0.3% that was factored in and that was expected by their markets. Now the dollar gained on Thursday after earlier pushing the yen to a 10-month low and kept the euro and sterling pinned near their weakest levels in about 3 months as investors placed their bets on the still resilient US economy. Remember, the dollar also pressured the rupee in the last few trading sessions as well, and market participants also digested mixed data coming in from China, because overall exports fell 8.8% in August on a year-on-year basis and imports contracted 7.3%. But on the other hand, what's surprising is crude imports surged 30.9%. That's almost a 31% uptick coming right there. However, US demand remained strong according to US government report that came out on Thursday. Now remember, prices had spiked earlier in the week after Saudi Arabia and Russia, the world's top 2 oil exporters, extended voluntary supply cuts to the year end. These were on top of the April cuts already agreed by several OPEC and OPEC Plus producing countries running to the end of 2024. Now, concerns about rising oil output from Iran and Venezuela, which could balance out a portion on cuts from Saudi and Russia, kept a lid on the market as well. So lots of geopolitical factors at play when it comes to oil. We'll see how that pans out, but it's a surprising fall in oil after 9 straight session of gains for WTI and 7 for crude.
All right, then let's quickly take you through all the events that are lined up for today. So today, starting from the global cues, US will be coming out with a wholesale inventory numbers. And back home in the IPO action, we have Jupiter Life IPO that will open up for subscription. Had opened up for subscription on the 6th of September. Today is the end date, so 8th of September is the last day to subscribe for the IPO. Also, the EMS IPO will open up for subscription on the 8th of September, which is today, and will go on till the 12th of September. And in other events to watch out for, the G20 Summit 2023 preparations are of course underway, and that is the big event that we all will be tracking very closely. And of course, we have BCCI that will be releasing its 400,000 more WC tickets on the 8th of September. So World Cup tickets will be up for grabs. Snehi, I think that is something that everybody has been trying to get their hands on, but very few have been able to do that so far.
That's so true, right? Because there is so much carnage on that Book My Show website, but do note that the tickets are being made live at 8 p.m. today for all matches, India matches as well as non-India matches. So make sure this is your last chance to grab those tickets. So be ready with all your smartphones with a good Wi-Fi connection and be ready at 8 p.m. to get a hand on those tickets. But with that, let's also look at other global stories that we are tracking for you this morning. And starting with macros then, US jobless claims have hit lowest levels since February to 216,000, pointing at a job market that continues to show signs of tightness. Now, initial claims for benefits were down by 13,000 to 216,000 versus the revised figure of 229,000 from last week.
Apple shares took a drop of nearly 3 to 4% after reports suggested that China is banning the use of iPhones by its government workers. And the reported restrictions have therefore raised concerns that Apple products could be caught up in tensions between US and China. Remember, China is Apple's third largest market, which accounts for 18% of the total revenue.
Well, in the weather update from Hong Kong, then, torrential rains in Hong Kong has led to widespread flooding across the densely packed city, submerging streets, shopping malls and metro stations as authorities shut schools and have asked workers to stay at home. The Hong Kong Stock Exchange will remain shut if the black rainstorm warning is still in place at 9 a.m.
And well, shifting gears then, the European Commission has designated as many as 6 tech giants as gatekeepers under its Digital Market Act. Amazon, Alphabet, Apple, Microsoft, Meta and ByteDance will have 6 months to bring their core platforms into the compliance with EU's DMC.
Well, and shifting focus to the G20 summit then, the national capital is all set to welcome US President Joe Biden for those much-awaited bilateral talks with PM Modi. What's likely to be on the agenda for these talks is progress on the GE jet engines, nuclear technology as well as other things, and Delhi police continues to conduct its security checks across the national capital region. Stringent traffic regulations are in place. Online delivery services barring medicines have been halted.
And well, India is all set to host the prestigious G20 summit as the top leaders from across the world will gather at the state-of-the-art Bharat Mandapam Convention Center in New Delhi. But what exactly is G20 and how does it function? Let's break this down. Firstly, the G20 or the Group of 20 is an intergovernmental forum consisting of 19 countries and the European Union or the EU. Now, it is the premier forum for international economic cooperation and plays an important role in shaping and strengthening global architecture and governance on all major international economic issues. Alongside the EU, the 19 other countries in the group are Argentina, Australia, Brazil, Canada, China, France, Germany, India, Indonesia, Italy, Japan, Mexico, Russia, Saudi Arabia, South Africa, South Korea, Turkey, the UK and the US. Together, these 20 members account for a whopping 85% of the global GDP, 75% of global merchandise trade, over 2/3 of the world's population and 82% of the trade commercial services. Now, there's a famous saying that every crisis presents a great opportunity, and it was the Asian financial crisis in the late 1990s that led to the birth of the G20. It started out as an informal forum for finance ministers and central bank governors to discuss global economic and financial issues. It was only after 2008 global financial crisis that the group was elevated to the summit level. Now, the first summit was hosted by the United States in November 2008. In the following years, in 2009 and 2010, the G20 summit was held twice a year. But starting 2011, the summit has been held once a year.
Let's go across to my colleague Srinjoy Chaudhary, who has more details from the ground in Delhi about how the city is gearing up for the G20 meet. Let's go across and listen in.
G20 is, of course, the biggest moment for India, the biggest moment of its kind for India since independence. And naturally, all members of the G20, except the Russian president and the Chinese supreme leader, will be here. Of course, Prime Minister will be meeting virtually every one of them. And also all those guests who are not members of the G20 but who are here, like President Sisi of Egypt, like Prime Minister Sheikh Hasina of Bangladesh, and so on. What we are hearing is that, of course, there will be a separate visit for President Biden, where the nuclear deal, the civil nuclear deal that was signed nearly 20 years ago, will come up for discussion, along with defense deals. The Americans are likely to bring up the M777 howitzer, and also perhaps one or two other things like the Striker. But beyond that, there will be lots to discuss with Biden. But there will be another bilateral right after that. That's the ceremonial visit of the Crown Prince of Saudi Arabia, Prince MBS, and that is on the 11th. But apart from those two, there will be meetings, bilaterals on the sidelines of the G20. And all of them, Prime Minister will endeavor to meet all of them, not just the other members, but also the guests, like, as I said, Egypt and Bangladesh and so on. So this will be a wholehearted effort by Prime Minister Modi to meet every foreign dignitary.
Well, thanks, Srinjoy, for taking us through all those details. But on the geopolitical front, then Prime Minister Narendra Modi addressed the ASEAN-Indian Summit in Jakarta, emphasizing the significance of ASEAN as the epicenter of growth. He said history and geography unite India and ASEAN. He also presented a 12-point proposal for strengthening India-ASEAN cooperation. Let's listen in to what PM Modi had to say on this.
Your Majesty, Excellencies, 21वीं सदी एशिया की सदी है, हम सबकी सदी है। इसके लिए आवश्यक है कि हम एक रूल्स बेस्ड पोस्ट कोविड वर्ल्ड ऑर्डर का निर्माण और मानव कल्याण के लिए सबका प्रयास, फ्री और ओपन इंडो पैसिफिक की प्रगति में और ग्लोबल साउथ की आवाज को बुलंद करने में हम सबके साझे हित है।
And well, with that, it's time for a quick breather. Viewers, don't go anywhere. After the break, there's lots more coming up. Welcome back. You're watching Market Cafe. Now, let's move on to news coming in on the domestic front. Well, have you ever wondered how much energy the world's fastest growing economy would need over the next few decades? Well, has it ever crossed your mind that a growing middle class will have energy demand shooting for air conditioning, for electric vehicles, and so much more as we aspire to grow? Let's go across to Prakash Priyadarshi to get more details on this.
The Power Ministry has asked all states and DISCOMs to take necessary steps in order to meet unprecedented power demand in the country. As per the Power Ministry's data, power demand has touched all-time high of 241 gigawatt during first week of September. In fact, it has increased by 23% during the month of August, which is one of the highest in the world. But the big concern for the government at this point of time is that some states are not able to meet high power demand, especially during night. Power shortage has reached to 10,000 megawatt during night, which is a big concern for the government at this point of time. Power Ministry is also saying that below normal monsoon has led to high power demand, and depletion in reservoir levels is something which is a big worry for the government, as it is not able to generate sufficient hydropower in order to make a balance. Apart from that, Power Ministry is also expecting to have higher power demand going forward. Taking all into consideration, Power Ministry has now asked all states to make necessary arrangement. In fact, it has already taken some emergency measures. All power generation companies have been instructed to import at least 6% coal for blending purpose. All gas-based power plants will have to be operated with immediate effect. Apart from that, when it comes to imported coal-based power plants, they will have to operate with 100% capacity for another 2 months. In addition to that, all states have been told to shift agricultural load on solar power. Meanwhile, Power Ministry has approached Ministry of Coal and Railways to speed up additional coal supply to the thermal power plants. But an interesting fact which needs to be taken into consideration is that Coal Ministry has maintained that there is sufficient coal stock is available with to the thermal power plants in order to meet any power demand. But Power Ministry data tells us different story. But the fact is that power demand has touched all-time high, and we are witnessing power shortage during non-solar hours.
Well, that's how the Power Ministry is gearing up to meet this sudden surge in power in India. Thanks, Prakash, for taking us through all those details. Let's get to move on then, and expecting the mutual fund industry to grow 5 times from the current levels. That's the word coming in from SBI Mutual Fund's Executive Director, Srinivas Jain. Listen in to this interaction from the sidelines of the Global Fintech Fest.
Eventually, cost of acquisition of customer will only keep going down. Digital enables that capability to bring the cost down over a period of time. In fact, I think the acquisition costs have already come down thanks to all the DPI stacks that are there, whether it's Aadhaar, UPI and things like that. So operationally cost will come down, acquisition cost also will come down.
So is the coming down of cost impacting the consumer in any sense?
100% it should impact the consumer, because end of the day, if operating costs are going to be lower, the benefit of the operating cost will be passed on to the customer. And that's what regulators, all the large institutions are pushing for.
So the mutual industry reached 3x, as we can hear from this fest. So how big fintech how big part fintech played in this?
No, fintech is playing a very important role. For example, in case of onboarding of investors, fintech has been one of the most critical place for the entire financial service industry, mutual fund per se.
So we can see the GFF going well this year, and if we peek into the future and talk about Fintech 2028, so what are your views? How big this industry will reach there?
It will be big. There is this beautiful saying in English that we always underestimate the short term and overestimate the short term and underestimate the long term. So whatever I'm going to say, what it's going to be in 5 years, will surely be 5x of that. So it's very difficult to articulate what it's going to be in 5 years. But for sure, we are still underpenetrated when it comes to fintech technologies reaching masses.
And well, the Global Fintech Fest 2023 was nothing short of spectacular, featuring conversations of over $2 billion in investment. Now, with over 80 enlightening white papers released and the insights of more than 900 speakers from 30 plus countries, this event was truly global in its reach. My colleague Ankur caught up with Global Fintech Fest organizers. Listen into what they had to say.
The industry participated wholeheartedly, and we had over 900 speakers. We had these speakers over 30 plus countries. We had overall 65,000 footfall. We also, not only the participation of audience, we created a lot of content, thought leadership for the industry. We had 22 reports and 81 white papers that we released at this GFF this year. In addition to this, there were over 2 billion worth of investment conversations which happened between the investors and the startups. And we had participation from multiple regulators from across countries as well.
Right. So you have thrown a lot of stats. Now I'm coming to collaborations. That was one thing which was outlier in this event, particularly this time compared to last year. Will you please talk about it?
Yeah, thanks. So this time the event actually was a global fintech festival, right? Gaurav said that we had 30 countries, but this is 30 country speakers. If you actually talk about the number of delegates, dignitaries and regulators, we had over 100 countries who participated in it. What we have had extensive conversations with peoples of all these countries that they want to increase this involvement a lot deeper in the next edition. So what is happening is we are shaping the future of fintech, and we will have probably 125 to 150 countries visiting us or participating with it in the next event that will happen.
Rightly said. Now I'm coming to Mr. Naveen Surya, who is a known face in the fintech industry. You are happy with the outcome this time? The time you would have seen when governor was speaking, there was no space to stand. And plus, these 4 launches, do you think this will impact the payment industry particularly for a long time?
I think the entire fintech sector, and not just governor's session, it was extraordinary with the product launch, even FM session, if you would have seen.
Yes.
They were both the sessions, and this is something which we have taken as a note for improvement, but the number of people standing for the entire session between hour to hour and a half was really overwhelming for us. So it means that every time we are estimating, we are proven that you're underestimating. So for an example,
Well, that's the word coming in from the organizers of the Global Fintech Fest. But let's get a move on then. And startups are redomiciling to India. Now, ET now has learned from sources that many startups are looking to shift their headquarters from Singapore, Mauritius and the Cayman Islands to India, as home country has suddenly become more attractive. Bhavya Dua has more details on this. Take it away, Bhavya.
Sachin Bansal's new venture Navi Fintech, e-commerce startup Zepto, payment startup Pine Labs and edtech startup Byju's are looking at redomiciling from Singapore to India. These startups were incorporated out of Singapore and had their operational headquarters in India and are now looking at incentivizing market, business and economic advantage of India by moving their domicile to the home country. With more and more reports talking about India becoming the second largest superpower by 2075 and more investments flowing in the country, the government wants these startups to move back to their home country as capital raising becomes more attractive. Apart from this, the taxation benefits to set up holding entities in countries such as Singapore, Mauritius and Cayman Islands are either reducing or ceasing to exist. This brings down the incentive to set up your holding company abroad while carrying out operations from India. With more and more changes in the existing bilateral tax treaties between these economies, the advantage of incorporating your company out of these nations is gradually coming down. Walmart-owned PhonePe was the first major startup to redomicile back to India in October of last year. Since then, all the businesses and entities of PhonePe are now wholly owned and consolidated under PhonePe Private Limited India. Experts think that if the government continues to provide better taxation and investment opportunities to startups in India and reduces their compliance burden, then India will become the first choice for a smooth incorporation for most startups.
And with that, it's time to slip into a short break. Don't go anywhere. After the break, we get you all the stocks that you need to keep in your radar for this trading session.
Hi there, welcome back, and you're still watching Market Cafe on ET Now. Now, Nomura has released a brokerage note on NBFCs where they mentioned that the cost of funds could rise from the first quarter and may peak out in the third quarter. Vamakshi is here with all of those details. Good morning, Vamakshi. Take it away.
Well, yes, NBFC stocks will be in focus on the back of that brokerage note that has come in from Nomura. Now, what Nomura is highlighting is that the NBFC's reliance on bank funding does remain at elevated levels. Now, as of FY23, bank funding to NBFC as well as HFCs constituted nearly 57% as well as 44% respectively of their borrowings. Now, increase in the cost of funds for NBFCs has been lower so far as compared to the broader increase in the interest rates. Now, what Nomura believes is that the cost of funds is expected to rise from Q1 up to nearly 30 to 40 basis points, and in fact they also believe that the cost of funds are likely to peak out in Q3. Now, the 30 to 40 basis points hike is higher than the guidance that was given by most NBFCs, and a potential rate cut cycle, if it comes, it is expected in the first half of FY25, and the benefits are only expected to accrue from the second half of FY25. Now, only from the funding cost as well as the spread perspective, and keeping other things constant, Nomura believes that SBI Cards, Five-Star Business as well as Credit Access are expected to benefit the most in a declining rate cycle, and that is because only a small portion of their borrowings are fixed while their entire loan book is fixed in nature. However, on the flip side, they're expecting LIC Housing Finance to be negatively impacted the most among all its peers because its borrowings as well as loans are floating in nature. So largely on the back of this brokerage note, watch out for NBFCs.
And well, thank you so much for that, Vamakshi. Let's shift gears and look at some of the management meets. Nirmal Bang has come out with highlights from IRIS Life management meet. Now, while Nuvama has released a note on the key takeaways from the Page Industries management meet, Vinny is here to tell us more on that. Take it away, Vinny.
Absolutely. So let's start with IRIS Life Science, and here what Nirmal Bang is highlighting and the key takeaways that we've gotten is in terms of one, the growth. They said that the company will continue to grow, and they believe the company will continue to grow at 400 to 500 basis points is what the management highlighted to them, which is faster than the IPM of around 9% to 10%, which is expected to grow at that rate. So yes, better than that rate is what they're expecting to grow. Now the company also said they do not expect to add any field force during the year. Price hike benefits will start coming in from Q2 FY24 for the company, and there's no other large patent expiry that is expected during FY24. For FY24, the company highlighted that they have targeted sales of around 2,000 to 2,100 crore rupees with an EBITDA margin of 35%. And Derma segment is expected to outpace the company level growth and margin improvement post commercialization of Derma facility in Jan 24 as well. In the insulin business also, the company is confident of achieving break even in FY24. Let's move on and talk about what Nuvama has said in terms of the highlights that they have gotten from Page Industries. So ARS implementation, the management highlighted to Nuvama impact on primary sales behind that, as well as the rollout will take some bit of a time. That is the word coming in there. On athleisure, they highlighted they believe the current collection is enough to drive the growth. And other than that, they're contemplating exclusive and very different looking women EBOs in the key cities as well. Their FY26 target is at rupees 8,000 crores in terms of revenues. Expect the share of EBOs online and like for large format stores to touch 50% from 30 to 35% as well. They plan to add around 200 to 250 EBOs this year as well.
IRIS Life and Page Industries, two stocks that we will be keeping on the radar this morning. Thanks, Vinny, for taking us through that. But we're joined in our studios by Ansh today. And Ansh, Nifty has broken out those, 19,650 resistance levels, and it is at the 1 month high as well. So take us through what the FNO setup looks like for today.
Sure. So actually it was all green for all the broader indices actually. It appears like the release of Jawan had sparked a similar surge of excitement in the market as well, as Nifty advanced for 5th consecutive session, hitting a 1 month high as well. In addition to that, like you mentioned, index have given a good decisive breakout from the 19,650 resistance which had been intact for over a month now. Whereas mid-cap and small-cap index continued its trend of hitting record highs. Also on Nifty chart, if you'll see, there seems to be a resistance approaching at around 19,850 level. So one needs to be cautious of that level. Now let's see what happened in FNO segment. Long builder was seen in Nifty futures with OI increasing by 5%. This indicates a shift in sentiment from neutral to positive. Whereas on option front, we saw put writing at 19,600 strike, which suggests that option traders expect Nifty to have good strong support at 19,600. Remember, this level is around 130 points below from the current closing. Also on upside, traders bought actually different strikes, but 20,000 was the most active one. Now let's shift our focus to what FIIs did. Index futures, FII covered 8,000 shorts and they added 9,000 longs. So we can say that there was a net increase of around 17,000 contract on upside. This is the reason why behind the FII total long position jumping from 51% to 57%. So in a nutshell, this seems to be like an upward shift of range that we had been discussing of 19,450 to 19,650, now spanning to revised 19,600 to 20,000, with 19,850 being a hurdle between them. This would be valid until Nifty holds above 19,600 on a closing basis.
Well, that's right, Ansh. Since we have a new range for the Nifty, tell us what are the stocks that we will be keeping on our radar for today's trading session then?
Sure. So Varroc Engineering will be the first stock in focus for today's trading session, as company has allotted 25,000 listed senior unsecured debentures, each with face value of around 1 lakh rupees, totaling 250 crores on a private placement basis. Apart from this, SJS Enterprises will also be in focus, as they have successfully completed an additional subscription of 2 lakh Class A equity shares of STPL, increasing their overall shareholding to 16.33%. Woodward Wizard Innovations will also be in focus on the back of the operational updates that the company has shared for the month of August. Company has dispatched around 1,496 units of electric two-wheelers, marking a 48% increase on month-on-month basis. Landmark Cars will also be in focus, as company has expanded its offering by including Mahindra and Mahindra vehicles. Exide has invested 100 crores in their wholly owned subsidiary, Exide Energy Solutions. Lastly, Mazagon will be in focus, as company has signed an agreement with US government to repair US Navy ships at the facility. Only 2 shipyards in India have such an agreement, making this a significant development for the company. So keep an eye on the stocks.
Well, absolutely, Ansh. You can see Mazagon yesterday, big gainer in trade. And other than that, also other stocks we will be keeping a close eye on in today's trading session. But a couple of more counters will also be in focus on the back of the Morgan Stanley conference. Now, we've got important commentary coming in on IDFC First and SBI Life. So let's go across to my colleague Ashesha for all the details on this. Good morning, Ashesha. Take it away.
Well, yes, Morgan Stanley met with the management of IDFC First Bank and SBI Life. On the back of that, we have some management commentary that has come in. First up, let's talk about IDFC First Bank, where management has guided for loan growth of 25% in FY24. They say they're seeing strong loan growth book across retail segments, and hence they've given a guidance of 25% for the current year. They expect fee income growth to outstrip overall balance sheet growth in the current year. And as far as their capital raising plans are concerned, management has said that their CET1 ratio currently stands at about 13.7%, and they intend to look to raise further capital in FY24. Moving on to SBI Life, then strong management commentary over here as well, where the management said that the strong FY24 APE growth guidance of 18 to 20% is what the management has given. Favorable product mix is what will drive VNB growth for the company from here on. Potentially higher commission payouts to banca are going to be performance based, and hence will not hurt VNB margins from here on. They see negligible risk of SBI moving to an open architecture model, and the management also highlighted that even if SBI has an open architecture model, they end up selling over 95% SBI mutual fund products. So this will not be a risk for SBI Life Insurance. So yes, strong management commentary that has come in from both of these counters, on account of which they are in focus today.
All right, thank you so much for that, Ashesha. But let's shift gear and look at the non-life insurance sector, from the year-on-year growth in August to performance from April to August. Sharad is here with all those details. Sharad, take it away.
Yes, in focus we are having the non-life insurance sector, and do remember this is the month of August coming in. The entire industry, if you look at it, the numbers are overall 14% up. When it comes to the private sector, it's almost 15.5%. But for the PSU, there's a lag coming in of roughly more than 7% growth. Now, of course, looking at the companies itself, we are having Star Health, where the premium has gone up by as high as 19%. While also for New India Assurance, the premium has gone up, but not so much, roughly almost 2.6%. When it comes to ICICI Lombard, that is where the chunk of growth is being seen, roughly 16% on a year-on-year basis. And if you look at the up to August performances for New India Assurance, it's a 7.7% growth. But for ICICI Lombard and Star Health, the range actually goes between 18 to 19%. So strong numbers coming in. But now let's look at the market share, how that has moved out, and that is very important, especially for the New India Assurance. They have seen a strong market actually going up, market almost by 100 basis points, while ICICI Lombard did see a correction coming in almost 9.37%, and Star Health, that has also gone up by almost 4.76%. Now, in terms of the PSU general insurance players over here, we see the numbers coming in. There has been a slight decrease in the overall industry as well, roughly 100 basis points, while the private has actually gained, and it's more than 50%. Now it's sitting at almost 54%.
That's a snapshot of the non-life insurance sector. Thanks a lot, Shad, for taking us through that. But I'm afraid with that, we're completely out of time on this edition of Market Cafe. While we bid you goodbye, you don't go anywhere, because the market will take all the action ahead.